Hello, welcome to this week's webinar, the Market Outlook, in conjunction with Aondo Markets. If you're watching the recorded version of this, it was held live on Wednesday, the 8th of November at 12:30 in the afternoon. So this is a webinar that we do every week on a Wednesday lunchtime, and it breaks down into a couple of parts. We look at the major markets, so we'll look at major FX pairs, major indices, and gold and oil, just to see what's been happening over the last week and what we should look out for in the days ahead. And we'll also do a bit on strategy. I've made a bit of a cock up because last week we did stochastics and this week we're doing stochastics as well. So I've got my scheduling a bit wrong, but we'll go back into that. We'll look at those again and see what signals are getting picked up there, if any. Let's just put up the risk warning quickly before we start looking at the markets. Now, Aondo are maybe better known for follow trading, where you can copy other traders, and you can read a bit more about that on my website at tradeafter.com. But you can also do self-directed trading, where you do your own trading. You decide what to buy, where to sell, and where to buy and sell. So we're going to be using Aondo's platform, Trade Hub, today. So let's get started. I thought it would be interesting to start off with pound against the US dollar, because last week we did the webinar as usual on a Wednesday, and then on a Thursday, it was a busy week last week for interest rates announcements, but we did have the announcement from the Bank of England on the Thursday, widely expected to raise rates, and they did. They raised rates by a 1/4%. So here's the move going into the rate rise. It was trading up around about the 133 level the day before, and this was the old resistance from back here, sort of middle October, up around about 133.40, up around that sort of area. But you can see the reaction. So the rates were raised as expected, but look at the reaction. We saw a heck of a move. The market spiked to 132.80. This is an hourly candlestick we're looking at, but was trading about 100 points lower. So we saw a really big swing on that announcement, and it can be, I think, something of a surprise. It's easier to explain after the fact, but I think because we had a situation where they said there's only going to be a couple more rate rises in the next 3 years, I think that might have disappointed people. And we also had something of a downbeat expectation of growth. So we saw the market get whacked right back to 130.40. Let me just flip over to a daily chart. Not much has changed over the last month. I think we still have this recovery from the lows still going. So I think that the pound is still, even though we've maybe had a little nudge below that trend line on the Bank of England last week, the pound is still within that recovery that's been going for much of 2017. So I think that's still positive. So, but there's a really obvious level to watch. If we pick up on, I think these lows from there we go, back in early October, around about, I think 130.27. Let's call it 130. I think 130 really is the big level for pound US dollar, and we do see the buyers, pretty much defending this. When we see weakness into here, we see the buyers come back out. But on the upside, it's definitely capped as well. We've got the old highs from October, about 133.40, near enough. So it's stuck in a range. Now, I would say my expectation would be for the market to have another push up and have a look at these sort of 136 plus levels in a sort of medium term, assuming 130 holds. So for now, any weakness towards 130 looks like a buying opportunity. Let's look on the hourlies, because I think it's interesting what's going on now. We had, after the market fell off a cliff, when we had the the interest rate decision, we have been building something of a recovery since the 3rd of November, so since Friday, and just now, just in the last hour, it's starting to slip below yesterday's lows. And I think there's a couple of ways of playing this. We can either think, okay, the market's going to go back, we're going to go back and revisit the low 130s. If we see strength coming in, it looks like a buying opportunity. Or alternatively, you could treat this as a a false break. You know, we're breaking below yesterday's lows. We've seen a pretty sharp sell-off, but the market has recovered. So what I did just before we started the webinar, this is an account I just use for webinars, and I've only got 50 quid in it, but I did a little trade, so I thought I'll buy it. I thought, well, so I bought it. How much did I buy? 0.4 a point. So 40p a point on that. So I'm up a massive £1.16 on that trade. But I thought it was interesting, you know, because if we flip on to maybe the 10-minute chart, there's the move. There's yesterday's lows, and it sort of spiked below it, and it's trying to get back above. So maybe an aggressive trade here, you know, if you think that's a false breakout, is to be a buyer with a stop below the latest spike low. You know, we've also got a bit of support back here. So I think this afternoon could be interesting to see, or do we see it claw its way back up into the mid sort of 131s? But, you know, from a slightly more longer term point of view, I think it's pretty clear. If we look at the hourlies over the last month, you know, the zones where we should be looking to buy or sell, you know, down towards the 130s if we want to be a buyer, up above 133 if we see a bit of weakness, we want to be a seller. So plenty of volatility over the last week, but it hasn't really changed the picture for the last month or so, really. Let's just plonk some stochastics on. We're going to talk about stochastics today. So if we bring up the squiggles, so on the drop-down list up here, you can see how many different indicators there are. I'm not the biggest fan of indicators, which you'll know if you've come to these before. So here are the different stochastics we have. Stochastics fast, stochastic full, no idea what that is. Stochastic momentum index, same. Stochastic RSI, stochastic RVI, stochastic slow. That's the one we want. And I've clicked off it. Hang on, stochastic slow. Here we go, stochastic slow. What's that? Let's get rid of that. So the textbook settings for a stochastic are 533 on a daily chart. That would be a 5-day stochastic, or 1066. I mean, clearly you can put in whatever you want to, and that's a 10-day stochastic. Let's stick with that for now. And what the stochastic does, it just tries to smooth out some of the volatility in the swings. So, for example, if you're familiar with RSIs, you know, where you have a reading above 70%, the market's said to be overbought. A reading below 30%, the market is said to be oversold. Stochastics work in a similar way, but with stochastics you have two lines. So you have effectively what are two moving average lines. So two moving average lines of how overbought or how oversold the market is, and it's a crossover of these lines that give us our signal. So for now, let's just stick on this hourly chart for pound US dollar. If we go back over, let's say, the last week or so. So down here, for example, November the 2nd, we had a buy signal down here. A bit of a messy sell signal there. Arguably not a, well, it was right on 30% there. So okay, a buy signal and a push. Sell signal up here, which did okay. Buy signal down there, which was pretty good. Sell signal up there, which was spot on. And nothing yet. If we get a bit of strength from the pound down here, on the hourly chart, on this 10 stochastic, which would be a 10-hour stochastic because it's an hourly chart, we could well get a buy signal over the next few hours. So that's stochastics, and we have this idea of divergence as well. We haven't got a brilliant example here. Maybe as we go through. Oh, actually, we've got not a bad example up here. So divergence is the market hits a level. So this is bearish divergence. The market hits a high, trades higher still, but the stochastics are falling away. Okay, so this is where the market hits higher highs, but the stochastic doesn't. That can be a warning that maybe the trend is running out of steam. So that worked pretty well. We don't really have any examples of bullish divergence, but I'm sure we will as we go through. So there's the pound. So 133.40, big level on the upside, and 130-ish, 130.30, big level on the downside. So definite, just stuck in a sideways range, need a breakout to give us the next direction. I would suggest the daily charts favor a breakout to the upside more than the downside, but I think if 130 breaks, we could, you know, it does look like that trend for the last 11 months or so is under some pressure, and we might have to stop being quite so bullish on pound US dollar. Let's have a look at the euro. The euro has been really interesting because it's been pretty boring. Right? It's been really quite confusing, I think, the euro. So this is euro dollar over the last year or so. And we'd had this trend, just to recap, we had this trend in euro dollar off these lows that looked like that. And we saw these highs hit in September up at 121. And for fans of patterns, you could say, I'm not a fan of patterns either, but you could say, okay, you've got head, shoulder, head, and even, no, head, shoulder, head, two heads? No, shoulder, head, shoulder. So you've got a head and shoulders pattern. Or you've got shoulder, head, shoulder, which broke last week, or a couple of weeks ago. What's been interesting here, we've broken some big levels of support on euro dollar, but so far at least, we haven't had any follow through. So that was the old support there, 116.60. Bigger support back here at about whatever that is, I can't even see it, 116.10ish, something like that. And we did spike low. We spiked lower, but then spent much of last week recovering. Let's flip this over to an hourly chart and you'll see. So the euro did spend much of the last week trying to recover. That was the move on the payrolls, but ended the week pretty much where it started last week, and it has slipped lower again this week. So it does suggest that this is pretty bearish for the euro. You know, we've broken some big levels of support where in the past we've seen buyers come back in, and we're just slipping. So I do think now the risk is for a move lower. You know, so if we were looking to target this, if we were looking at sort of previous levels, we are probably picking up on here around about 113 is the next big area of support. It was quite a bit of resistance for a while, broke above and moved higher. So I think the trade here, if you were like a medium-term trader, if we're targeting 113, it's about, what is it, 300 points lower than where we are now. And the obvious place to have the stop, I would suggest, is above last week's high, so up above 117. So you've got 110 points risk and 300 points potential profit. You know, it looks a good trade in terms of risk versus reward. What's maybe counteracts the bearish argument in the short term, at least, we've broken below these supports twice now, but we haven't really seen any follow through. So even though it's these big levels, relatively big levels have been broken, we haven't really seen the market take off. So if you were still convinced the euro was going to go up, you could be a buyer now with a stop under yesterday's low. So it's about 30 points away. But I think it's interesting. You know, I think it's for me it looks more down than up, but we're not really getting the follow through. Saying all that, our stochastics down here, because we're on the subject of the old stochastics today, they are just about, it seems, about to give a buy signal. If we saw a bit of euro strength down here, we would have the stochastics cross over and give us a buy. But I think the fact that we've broken these old big supports, to me at least, does suggest we should be seeing it under a bit more pressure. So I think euro, it's been a little bit dull the last couple of days, but I think it's an interesting one to watch, the euro down at these sort of levels. Let's see what happens. So that's euro dollar. If we let's look at a couple of other currencies while we're on this, see what else looks interesting. Euro sterling, I mean, it's always an interesting one with the old Brexit shenanigans and everything else. So euro sterling, again, not too much has changed. You know, we saw this rally end of the summer up to about 93. So a euro being worth 93 pence, and then everyone was getting excited. Are we going to go to parity? You know, where a euro is worth a pound. And just when everyone thinks something's going to go one way, of course, it happens nearly all the time, the market goes completely the other way. So we're back. We've come back to this which is a big old level of support on the euro, going back sort of earlier in the summer, around about 87, near enough. So we saw the market fell off, and again we've seen the buyers come back in just back at the beginning of the month, 1st of November. You know, spiked down as low as 87.33. Markets come in and bang. So again, if you thought euro sterling was going to have another go with those 93 highs, it's a good level to buy. You know, the market, where's it currently trading? 88.42 to buy. We've got a definite reference there, 87.20. So let's say we put a stop in at, say, 86.90. It's got 150 odd point stop, and potentially 400 odd and a bit more points on the upside if we are going to revisit those highs. So I think euro sterling is interesting as well. For fans of the squiggles, we had a buy signal back here on that strong move up. Still in buy mode, the old stochastics. We've had buy signals back here and there, and a sell signal there. So it has not done a bad job, stochastics, of calling the turning points. But euro sterling, I think, for the fact that support's held, you know, would favour a move higher for the euro against the pound. let's see what happens. And that's dollar yen. I think we've touched on dollar yen a bit in the past. Let's just take a look at that again. Where is dollar yen? Because again, not much has happened, but they're all near really big levels. You know, so you don't think it's gonna. Something needs to happen. But dollar yen, I think the trade, I would still favour a short trade, because if you just pick up on what a problem these levels have been for dollar yen this year. So let's go back to that one. So right back since January, so January the 19th-ish, so dollar yen rally as high as 115.70-ish, sell-off, rallies back up near enough 115.70, much deeper sell-off. So we go from 115 down towards 108. So we see a 700-point move in dollar yen. Stages really impressive recovery, but again at 114.40 this time gets clobbered. Same again. And this is where we are. We are where we are now. So for the last what, 2-3 weeks, it just cannot make much progress through this level. So again, if you thought, you know, dollar yen was going to weaken from here, it's a pretty good area to do it. You know, personally, I'd want to trade it. I think an aggressive stop is above this high here. So that's the November the 6th. When was that? That's Monday. So an aggressive stop is above Monday's high. So the high for Monday was 114.74. A more relaxed stop will be above 115.70, because again, that's the big level going to earlier in the year. But if dollar Japanese yen was going to stay anywhere, we're going to see the dollar fall, then this is the area. So I think it's really interesting up here. Just to pick up on the old squiggles down here again, you know, with the buy signal on the way up, sell signal. This is bearish divergence again. The market hits a high, and we get a sell signal. When it does that, sells off for maybe 2 or 3 days, and then pokes its way higher earlier this week, but with no follow through. But the stochastics have really fallen away. So again, this is bearish divergence. That's suggesting, at the very least, you know, a short-term top should be in place up here. But I think it is interesting. I mean, look, these markets I think they're all interesting because they are near such big levels. So that's some of the major currencies done. Let's take a look at what should we look at next? I know there's a few Bitcoin fans out there. Let's see what's been happening in what a surprise, it's come up again, in the crazy world of Bitcoin. So this is the cryptocurrency. Just to remind ourselves what's happened this year. So it started this year around about, where did it start? Open $995 near enough. So that's where it started. Let's say $1,000. It's currently trading at 7,500. So we've seen, you know, a fair bit of growth this year. And I think that I think first of all, I think it's a bubble, right? I think this is a market that is purely driven by sentiment and an element of the fear of missing out. You know, the price goes higher and sucks in more buyers. Saying that, I have bought it on the way up, and I'm in at the moment. But just because it's a bubble, you know, doesn't mean it can't go any higher. And you can't argue with the trend. You know, the trend that we're seeing. If we pick up on just the last leg of the trend over the last 2 months, you know, that's where it's coming in. And breakouts, you know, I've just been sort of trading it on simple breakouts. You know, looking for a previous high. If it breaks that, buy some. Up here, if it breaks that, buy some. And again, if it breaks the high for, I think, is it actually doing it now? I think 7,550-ish is the level. Buy some more, you know. But I think the difficult thing is, I think if people are trying to day trade this, I think it's just incredibly hard, because if you just look on the short-term chart, you know, the level of volatility you have is ridiculous. So last week, November the 2nd, in an hour, it traded as high as 7,420, traded as low as 6,754. So it moved nearly $700. It moved 10% in an hour. You know, so I think it's a ludicrous market in the very short term. But you know, medium to longer term, you can't argue with the trends. But I also, part of me does think we're all going to come in one day and it will have halved in price overnight. But for now, the trend is still undeniably strong. You know, we see breakouts, the market moves higher, and so the whole crypto craziness just goes on. So there you go. That's Bitcoin. Well, let's see where it is in a week's time. To slightly more normal markets, let's have a look. Let's do our usual look at the market that only ever goes up. US stock markets. So yesterday, again, this is the Dow we're looking at. This is the Wall Street rolling. So yesterday, again, we've seen this market, knockout to a fresh all-time high. The volatility is really low. The moves we're seeing on a day-by-day basis, you can see just over the last week, just how tiny it is. You get the odd burst now and again of stuff being interesting, but then it goes really boring. Let's just take a quick look. What was the range yesterday on the Dow? So November the 7th. So if you look at maybe just normal in-hours trading, so it hit a high of 23.6, near enough, and then hit a low of 23.482. It's not bad, so it's a 120-point range on the Dow. But for something that's got a value of 23,500, that's still, I think, not too exciting. But let's go back to the daily. So it's the same old for these US stock markets. You cannot argue with this trend. You might think this is ridiculous. The markets are up 25% in a year, but they're still going up. There's our trend for this year. If we went back to the election last year, it has really accelerated. Arguably, it is a bit overstretched, but the market keeps on going up. So just a buyer on dips still for these US markets. If flip over to the hourlies and watch maybe some of the danger levels to keep an eye on if we did get a more pronounced sell-off. Here we go. So on the Dow, we've got these pockets left from the end of October, around about what, 23,200, 23,250. So if the market sold off 200, 300 points from here, it still looks like a buying opportunity. We've still seen buyers come in. So at the moment, there's no sign of these markets making a top. We had support left yesterday at 23,482. For shorter term traders, we've got it's quite a big 23,465 to 482. So the lows from the 6th of November, so a couple of days ago, the lows from yesterday. So again, if we saw the market under a bit of pressure this afternoon, that's one area to watch out for. But it is the same old for US stock markets, still going higher. If you look at quick look at the S&P, it's the same sort of thing, of course. Broader market index than the Dow, but very nearly at 2,600. It's again a phenomenal move. It was only, when was it? It was really sort of late September. It started breaking through the 2,500 mark, and here we are nearly at 2,600. So a heck of a move. Sell-offs along the way, but these just fuel the buyers. We do have bearish divergence. On the stochastics again, when the market's pushed to a high, it's sold off. It's pushed higher again, but the stochastics are doing lower highs. So it's the first time we've had that since maybe here or maybe here. So maybe we are due a bit of cooling off, but the sell signals have been pretty useless because this market has just pushed higher and higher still. So let's see what happens. But you can see, on the daily chart, lots of support in the sort of 25.40, 25.45 area. So no sign, famous last words, but no signs of an imminent crash for the US stock market. For European markets, let's look at the DAX. The German market had a really big move yesterday, relatively to what we've been experiencing lately. A relatively big move yesterday, but it still set fresh all-time highs during the day. So the DAX touched what, 13,550. Near enough during the day. Big move down, and maybe not surprisingly, something of a quieter day so far after a bit of a shocky move yesterday. But again, on the DAX, this weakness, people just treat it as a buying opportunity. I think obvious levels to watch if you were looking at the DAX. I'd say the old all-time highs that did prove to be a major turning point at the beginning of the summer. So 12,950, 13,000, that sort of area. And you can see when it broke out just over a month or just under a month ago, it sort of faffed around this level for a while. So I think that's one to watch. If we did see, a 300-point drop in the DAX from where it is now, then maybe that's one area to watch for potential support. But again, it's a strong market. Only yesterday it set a fresh all-time high. Markets that are setting fresh all-time highs, famous last words, seldom do a handbrake turn and end up dropping 30% in the blink of an eye. So any weakness still looks like a buying opportunity. The FTSE though, back here in the UK, the FTSE is still it's a bit odd really. Let's have a look. Where is it? I can't find it. What am I looking for? UK is right at the top. There we go. Interestingly, I think we did have the other day a record closing high for the FTSE, according to the radio. So it finished at a level it never finished at before. But okay, well that's a close. But that's only one price, isn't it? If we look at what the market is doing since June, it cannot get through 7,600. So again, if you could get in your TARDIS, the time to go short was yesterday. You know, if you thought this is going to be a barrier again, 7,600 is the big level. So if you really thought the UK stock market was going to go nowhere or going to go down from here, you know, this is the level where it should be running out of steam. But you know, it still hasn't broken out to fresh all-time highs, despite US stock markets hitting fresh all-time highs nearly every other day, and the DAX German market doing it again yesterday. We're not seeing similar sort of moves for the FTSE. You know, clearly, you know, the strength of sterling plays a part here. You know, we all know that plenty of the companies that make up the FTSE 100 derive their earnings overseas, so a stronger pound doesn't really help them. So it does tend to move inverse to the pound. So it's always a bit of an odd stock market index, I think, the FTSE 100. Let's wrap things up by looking at gold and oil. Let's look at gold first of all, because I was looking at that 1275 level. I think, no, it was 1275 a week ago, and I was suggesting that maybe it was an interesting level, and we could see the market rally from there. It's rallied a bit. It's up about $6, the price of gold, since last week. But why it's interesting is it's really just to do with this recovery that we've seen this year. So we've seen the price of gold from the beginning of the year go up from about 1160, traded as high as 1360. So we saw, you know, a chunky old move into September. It slid, you know, pretty heavily since then, but we did have, it's almost textbook this actually, if you look at it. We did have, there's our little correction-y downtrendy thing. So the market, as the correction, breaks the trend line, and is you know, pretty often the case. Just because it's broken the trend line doesn't mean it's suddenly going to go bang all the way up to there. It's come back down, and it's tested the old support. So again, you know, if you quite fancy gold, there's our obvious level, I think, for a stop. You know, for the closest I would want it at the moment, based off the dailies, is somewhere below 1260. So I think, assuming 1260 holds, it doesn't seem too ridiculous to expect a run back up to those old highs. Even if 1260 starts to break, we've got big supports left down here, and I think it's only if it breaks below sort of 1200 that we have to worry that actually the recovery story is finished. But for now, break out of the trend line, retest to the old lows. You know, it's almost a textbooky type move that's gearing up. And again, looking at the squiggles down here, the stochastics, the buy signal down there, that's the last buy signal on the dailies, was the end of October. Sell signal up there, a bit late, and a bit of a messy old buy and sell buy signals down here, but eventually it got it right. So I think, again, for gold, 1260, big level to watch, and while it's above here, there's the argument for it going back up. Now oil has moved out to it must be its best level for quite some time. It's finally broken those highs from the beginning of the year. So now we're at levels on oil not seen since June 2015, sorry. So we're at a 2-year high for the price of oil, which is interesting actually. I think some of the arrests going on, I think, in Saudi Arabia, clearly lifting the price of oil. I think it's up, interesting up here. We've got these old highs up at what, 63. So I think that would be the next immediate obstacle. It's currently trading at 57. Let's flip it over though to the dailies. So I'm glad it's moved higher, because it has, you know, it's extended this trend that we've had since June of this year. So let's just pick up on that. So, you know, it's confirmed the strength. Okay, we're getting close to a level that's a big barrier from a few years ago for the price of oil, and there's probably no reason to think it's suddenly going to go zooming up to $100 a barrel. You can see how much it has accelerated over the last 3 weeks or so. We've gone from 52 to 57. So it is a bit overextended, but I'd suggest any weakness, still looks like a buying opportunity. So the old highs were just above 56. So even if it drops back to $51 a barrel, that trend still very much intact. I mean, this afternoon we have the latest oil inventory data, so that comes out, I think it's at 3:30, something like that. So that can be a bit volatile when that comes out, but I think for the price of oil, any weakness still looks to be a buy. Let's just flip over to the hourlies to pick up on some shorter term levels. So you can see, various little pockets left on this squeeze higher. We've got really big support down here from the end of October. We spent quite a few days sort of faffing around $54, $53.75 a level. A bit of support left before that surge, the latest surge a couple of days ago, at 55.5, then 54.5. So if we do get some pressure on it from here, there's lots of levels to think about buying in. But that latest strength confirming the trend that's been in place now since June. So I think expect the price of oil to go higher. It's a bit overextended in the short term, but maybe 60, 63 looks like a reasonable target. While this trend continues to hold. We'll see. So plenty to keep an eye on. We are seeing a bit of a pound recovery going on after that break. Not much going on. How's my little tiny trade doing? Let's bring it up. Where is it? 8 pence profit while doing a webinar. It's free money. We'll start wrapping things up there though. So I think lots to keep an eye on. I think the euro is interesting. Euro dollar is interesting because it's broken these big levels, but we're not seeing it really under that much pressure. So if you want to be aggressive, you could be a buyer and assume this is a false break. You have a stop under the lows for the week so far. Or you want to be a bit more patient, you might think about selling into any rallies, assuming it doesn't get above 117. So I think that is a pretty interesting one to keep an eye on. Stock markets is the same old story. Still strong. Weakness in the US still looks like a buying opportunity. As usual, we'll do it all again in a week's time. So thanks for coming along today. We'll see where we are in the next week. I think we've got Chinese inflation data out early Thursday morning or early Friday morning. That's the only really major announcement left this week. So it's a little bit of a quiet one, but we'll come back next Wednesday, do it all again, and see where the markets are. So we'll wrap things up there. I hope you've enjoyed it, and thanks for coming.